Well, good morning, everybody. My name is Brian Quast. I work for BMO Capital Markets, and today I have with me the great pleasure of having Sandeep Biswas, the Managing Director and CEO of Newcrest Mining. Sandeep is going to give us a short presentation on how, under his leadership, they are forging an even stronger Newcrest, and then I'll ask some questions that are sort of top of investor minds at the moment. And with that short introduction, over to you, Sandeep.
Thanks, Brian, and good morning, everyone. Before I do begin, please note our disclaimers on these slides and a reminder that we're a US dollar reporting entity, so all references in this presentation are in US dollars. Earlier this year, we refreshed our aspirations for the next 5 years and defined our new company purpose, which is creating a brighter future through safe and responsible mining. Sustainability is at the core of that purpose. In May 21, we set ourselves a goal of net zero carbon emissions by 2050. This builds on our previously announced target of a 30% reduction in emissions intensity by 2030. As a gold company with mines that are expected to be operating in 2050, we're taking action on climate very seriously. We've developed greenhouse gas management and abatement plans for each of our operating sites, and we've also linked our senior executive incentive payments directly to progress on this plan. In December 2020, we signed a landmark 15-year renewable energy power purchase agreement, which will cover a significant portion of Cadia's future projected energy requirements. And we've also established a very strong technical team now, which is fully dedicated to defining in detail and progressing our roadmap to net zero by 2050. Like safety, sustainability is a journey and requires a commitment at every level of the organisation. So far, we're doing well. We've scored well in a number of sustainability indices, and we plan to keep improving and doing better. So moving now to our operating and financial performance in FY21. We had an improved safety performance, and we had a strong operational performance, which underpinned a record profit, record all-in sustaining cost margin, record free cash flow, and record dividends. And all of this was achieved while making significant progress on and investing in our strong portfolio of growth options, which I'll talk a little bit about later. I'm also particularly proud to say that we're now just over 6 years free of fatalities, and we've seen significant reductions in recordable injury rates to what are low levels for our industry. As you'd expect, a key focus for us is maximising value from our existing assets. And Cadia's performance in FY21 is a great example of where we've driven value through safe operation, fresh and innovative thinking, and continuous improvement. Cadia increased its mine production and mill throughput, achieving 32 million tonnes on both measures. This result is significantly above the nameplate capacity and the prior year's performance. And this improvement's been underpinned with little to no capital, and as a result of debottlenecking and existing processes and equipment. The Cadia expansion project currently in progress will further lift the nameplate capacity of the plant and, of course, deliver the next panel cave. Improved operational performance and strong prices in FY21 drove Cadia's $1.2 billion pre-tax free cash flow generation after all capital expenditures. This takes Cadia's cumulative pre-tax free cash flow generation to $3.9 billion just over the last 4 years. Our earnings per share have also grown around 230% since FY16, and FY21 was the 6th consecutive year that we increased our dividends to shareholders. In FY21, we paid out 41% of free cash flow as dividends. Now, free cash flow can vary year to year for many reasons, but we remain committed to our policy of paying out 30 to 60% of free cash flow and dividends with a minimum annual dividend of 15 cents per share. Newcrest is in the enviable position of having a current reserve life of around 25 years. Now, this is based on an estimated 49 million ounces of ore reserves as of 31st December 2020, and key, it's before any ore reserves from Red Chris or Havieron. We'll have more to say on that when we release the outcomes of the pre-feasibility studies later this month. and there is a high likelihood that all reserves will grow further over time with more drilling. So we consider Newcrest long reserve life, low all-in cost, sustaining cost position, our asset mix with two of the largest deposits in the industry in Cadia and Lihir, and a great growth pipeline in both brownfield and greenfield opportunities. And these being the key attributes which distinguish Newcrest in the gold industry and position us uniquely to generate value for shareholders in the long term. Now, this is something that is I think often ignored in our company in terms of how people see us, because in addition to gold endowment, Newcrest has a significant exposure to copper. We have all reserves estimating 6.8 million tonnes, or approximately 15 billion pounds. Now, this copper exposure is a natural consequence of our search for gold, with which copper is often associated. It's our skill sets, including our capability to economically mine deep porphyry ore bodies, and it's also a function of the geology of the regions in which we've established operations. Copper comprised almost 22% of our revenue in FY21, which is an increase from 15% in FY19 and 17% in FY20. Now, this is expected to increase naturally with the relative contribution of copper to Cadia's revenue expected to grow and the significant copper potential at our other sites. While Newcrest will remain a gold company, this potential increase in copper provides significant benefits, which include earnings diversification, the copper credits, which improves both our all-in sustaining cost and free cash flow. And they're both two really important metals of the future, with copper in particular being key to a low-carbon world, which should continue to support demand. Valuing our business is your job, and as investors, not ours, and I'm not here to tell you how to do it. What I will do, however, is share how we see Newcrest from an investment thesis viewpoint. We have the lowest enterprise value to reserves of the peer group, which means for every dollar you invest in Newcrest, you're getting a greater exposure to economically mineable gold in the ground. We are generally trading at lower end of the peer multiples on short-term metrics, which seems counterintuitive to the long-term nature of our assets, which based on existing reserves will still be operating and generating earnings long after other mines have ceased production. And we also currently trade on a discount to our peers, particularly our North American peers, on a price to net present value metric, which means for every dollar you invest in Newcrest, you get a higher exposure to future value. So happily for me, you get to work the models and I get to deliver the pre-feasibility studies for our key growth projects at Red Chris, Havieron and Lihir. We believe these will provide a clearer picture of our longer term outlook and further strengthen our investment proposition. At Red Chris, we had significant milestones achieved in FY21. In March, we released our initial mineral resource estimate. Then in June, we commenced construction of the exploration decline. And this is a critical project milestone which underpins our goals to have a block cave in operation at Red Chris in the next 5 to 6 years. We also completed over 115,000 metres of successful drilling in FY21. This extended the porphyry corridor 500 metres to the east, identified the existence of multiple discrete pods of high-grade mineralisation in the east zone, and also discovered East Ridge. We're evaluating options to early mine these pods with the aim of generating cash flows prior to the completion of the main block cave. The findings of the Red Chris feasibility study will be released around the end of the month. This PFS, however, will only be stage one of the Red Chris journey, as we've got reserve growth upside potential in exciting new zones such as East Ridge, which lie outside our initial resource estimate. And we've also identified further targets along the porphyry corridor and also at the neighbouring GJ property, and we plan to conduct drilling tests on these targets in the very near future. Havieron in Western Australia is also progressing well. From entering the earning arrangement in March 2019, within 2.5 years, we've completed 194,000 metres of drilling, identified an initial inferred mineral resource estimate of 3.4 million ounces of gold and 160,000 tonnes of copper. We've also commenced early works, which included the construction of the box cut, and associated surface infrastructure, and we've progressed the exploration decline to 129 metres. As with Red Chris, the decline is critical to achieving our goal of first production from Havieron in the next 2 to 3 years. Our pre-feasibility study, to be released later this year, is expected to be just the first stage in Havieron's evolution. Mineralisation remains open in multiple directions outside of our initial inferred resource estimate, and we've seen remarkable drill results from below the resource boundary and good intercepts from the northern breccia and the northwest crescent. So what this slide does is summarises the progress we've made advancing our range of growth options over the past year and outlines our upcoming near-term milestones. We've recently progressed stage 1 and 2 of the expansion at Cadia, including the development of the next block cave, PC23. We've released a summary of the PFS of block cave PC12. We've announced a further open pit cutback at Telfer, and also released details of the Lihir pit optimisation study that brings forward grade and provides the basis for our aspiration of Lihir being a 1 million ounce plus producer. We remain on track to release the Red Chris, Havieron and Lihir Phase 14A pre-feasibility studies shortly. And as I've said, we believe these studies will help greatly to articulate the future potential of our business and of course provide the key information such as the expected timing, production, capital, operating costs and returns. Also, at the Wafi-Golpu project, I'm pleased to say that we are in discussions with the state of Papua New Guinea in relation to the special mining lease, which is the key step to commencing development of this world-class ore body. So exciting times for Newcrest, and I look forward to keeping you updated in the very near future. And with that, I'll now hand back to you, Brian.
Great, thanks for that, Sandeep. Just got a couple of questions here, just sort of top of investor mind type of questions. One of the things that you highlighted through your prepared remarks there were a lot of the growth options that you have coming through the company. With growth comes capital requirements. How do you propose to fund all of these projects?
The first thing is these are all very high return projects. And with the exception of Golpu, they're all essentially brownfield developments. So leveraging our existing infrastructure and generating great returns. The thing about block cave projects is generally the capital's pretty spread out over about 5 years from the commencement of the decline. So we don't typically see any large capital spends in any particular year. And the free cash flow has been pretty strong, Brian. So, you know, there's potential that we'll fund a good portion, if not all of these, through free cash flow. And you know, the other thing to remember is these things start producing cash at some point. It's not like we've got to wait for 5 years or 6 years before any project generates returns. Havieron, for example, will come in well before the block cave at Red Chris. But we've got to remember, we've been preparing for this, and I flagged this in the last few years. We've got a great balance sheet, net cash position, great liquidity, no debt due until after FY30. So we've placed ourselves, I think, very well to fund and deliver these opportunities and really get the future of Newcrest established.
Maybe changing tack, but sticking with the growth theme. You know, beyond your existing portfolio, you've expressed a target of 2 to 3 greenfield discoveries over the next 5 years. Where are you really focusing the search for those discoveries?
Well, over the last few years, Brian, we've sort of zeroed in on, I mean, ultimately you've got to go where the gold is, but we think Australia is a natural area of focus for us, particularly around Telfer infrastructure with Havieron, Jury and the Wilkie packages, but we're also taking property in other parts of Australia. The potential there is more deep undercover type discoveries. North America, of course, around Red Chris, but also in other properties that we're farming into. And in South America, we're focusing on a range of earn-in arrangements in Ecuador and Chile. So it's probably those 3 zones, Brian, is where we're now zeroed in on.
And so staying with the growth theme and sort of showing where we're going to platform off of, you know, your fiscal 22 production guidance of 1.8 to 2 million ounces is below your fiscal 21 production and seems to be lower than what the market expected. Would you say this is the low point of your expected production for the next little while?
before I get to that, what I will say, and I've said it for many years now, is our focus is on cash flow and margin, not just ounces. But within that context, FY22 is an unusual year for a couple of reasons. We're doing the mill motor change out at Cadia, which is reducing ounces from there, and we all are also doing the reline of the compartment in the Lihir AC4. And what we also have factored in is some continuing, not disruptions, but effects due to COVID at Lihir because of all the personnel, logistics and border control issues that we've had since the start of COVID. And this has all been allowed for in our FY22 guidance. But, with the Havieron, Red Chris and 14A studies at Lihir coming out, in the very near future, we'll be able to give the market a much better view what the medium term looks like and when these projects start making a contribution and what our profile looks like beyond the current year guidance.
Yeah, you do have quite a series of technical reports coming out over the next little while here. Would we expect that the capital that you're going to be putting in over the medium term is going to be you've spoken to being spread out over a number of years, but is it going to remain elevated for a number of years, stay relatively flat? How should we look at capital going forwards?
I think if you look at our all-in sustaining costs, which includes sustaining capital, it's actually decreased in terms of our guidance for the coming year compared to the last year. Where we've seen the increase is in our growth capex, which is about funding the future of the company. And we've also got to bear in mind, even last year when we got 1.1 billion of free cash flow, that included 600 million spent on growth capex just in last year. So I think there will be an increase, obviously, as we do these projects, but then as we start getting the returns from them and also the increased profile in copper, I think we'll see a very balanced profile of the company going forward that will give genuine growth and also an increasing exposure to copper, which I talked about before. You've got copper in Havieron, you've got copper at Red Chris, you've got a relative contribution increase at Cadia because of its expansion to 35 million. And of course, Golpu, if we can get that approved, that has a lot of copper and gold in it.
And you do get that 1.8 to 2 million ounces out of relatively few assets, at least compared to your peers. Concentration risk is something that investors have brought up in the past. Is it something that keeps you up at night, or bigger, better assets are just bigger, better assets to run?
Look, I think you can have too many assets, but the important thing of the assets that you do have, which is where I come from, is they're world-class assets. All of our 4 assets will be tier 1 mines. Golpu, if it comes online, that's a tier 1 mine. And we've got to bear in mind with our recent discoveries at Havieron and what we're doing at Red Chris is, 3 of our big mines of the future are based in Australia or Canada. And if you look at the gold and copper growth that's going to come out of it, it's all essentially Canada and Australia based. So I think we're well balanced, and running a smaller number of great assets is better than running a whole heap of assets which may not meet the quality criteria that certainly we'd apply to Newcrest.
And maybe with just a minute or two to go here, if you had to sum up 3 key points why investors should pick Newcrest as an investment, what would those 3 key points be from your perspective?
Oh, that's a good question. I think our long life and a low-cost asset base with that steady increase to copper, I think that's really important differentiator for Newcrest. Our technical skills, we can mine anything our exploration people can find, whether it's shallow surface mining or deep underground block caving. And I think that means for whatever ore body we find, we can extract the most value. And the other thing I think is we've got an internal growth portfolio. We don't necessarily have to look externally for where our growth's coming from. It's developing what we have inside our company with our own technology, with our own people. And I think that really does set us apart from other companies, particularly in the gold space.
Well, that's great. And I think we've run into all the time that we've got here. Always a pleasure to talk to you, Sandeep. Stay healthy, and we'll talk again soon.
You too, Brian. Thanks for the opportunity to speak.